What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we're going to talk about the Bitcoin crash that we experienced last week and some of the reasons behind this crash and what could also be behind the current downtrend. We're kind of bleeding out here below 26,000. Things are looking red. And we'll end it up with getting a brief look at the charts, at the 1 day and the 1 week chart, just to kind of confirm where we are. But first, let's keep in mind that this ain't no financial advice. Anything I say during this video could cause you to become a homeless bum living on the side of the railroad tracks in a cardboard box subsiding on government cheese. Kind of wonder how many of you even know what government cheese is. If you're my age, and I'm 56 years old now, you probably do know what government cheese is and surplus peanut butter. Post in the comments if you know what government cheese is. And if you've ever had government cheese, that stuff was good. It was like a big block of Velveeta cheese. And if you've ever had surplus government peanut butter, let me know. And if you have no idea what I'm talking about, ask your parents or some of the grown folks that are around you. All right. So first of all, the BTC crash. What went on? Why did we have this big dip? While everyone has been talking about bull market, bull market, bull market. While I say bull garbage. Let's be real. Nobody knows what really can happen. And none of these people who have been hollering bull market and how Bitcoin will never go below 29,000 again, let this be a lesson to you that you better kind of watch who you believe. And you need to understand that anything can and will happen in the markets. And that's in crypto, in the stock market, world economy. We don't know what things can come out of the blue and just wreck things. We don't know when. There could be a black swan. As a matter of fact, this crash that we had, it's not even a black swan. These are just natural things happening at the same time. So what has caused this dip? First of all, they had the FOMC meeting minutes released, which were in stark contrast to whenever the previous announcement of the rate hikes that didn't sound quite as hawkish. And then we look at the meeting minutes and they're talking a lot more harshly about what we might have to do to curb inflation. It sounded a little bit more serious than what they had said before when the announcement was made of the rate hike. So that caused people to grab their wallets. We also had this report of Elon Musk selling a crap ton of BTC that was held by SpaceX. I don't remember the number of what it was, but it was somewhere in the hundreds of millions, maybe, if that. And that, I think, would definitely be a pretty reliable reason why the price would go down very swiftly, because he did sell a chunk of Bitcoin. So maybe he had to free up some money for SpaceX because they're wanting to fly to Mars and populate the red planet. So the selling of the BTC by SpaceX was an absolute reason why we would see such a quick drop. We also had the reports of Michael Burry shorting the NASDAQ, QQQ. We had seen reports of this that were grossly exaggerated, because they said that Michael Burry is betting $1.6 billion against the stock market. And that's not true. The truth was that Michael Burry was doing a short. He is putting in shorts on the QQQ. But when you place a short, and that's a put, by the way, and the way you can think of it, a put is when you put down the phone because you want to sell. A call is when you're calling because you want to buy. So Michael Burry places this put. but it did not cost him $1.6 billion. It only cost, it's in the millions. I don't even know if it's 100 million. It might be 10 or 11 million. Don't quote me on that, but it's a fraction of what the bet is because it's only at, say, 2% premium. Okay, so in other words, he places this put order, and if the QQQ takes a dive, then he can allow that put order to come to fruition, and then he can rake in billions of dollars or over $1 billion or whatever. But if the market goes up, well, then he just loses, say, the 11 million for the premium. Now, why would he do this? Is he 100% sure that the market is going to go down? No, he's not. But what it is, I'll tell you what it is. It's an insurance policy. He's just hedging against a market crash to protect himself and his investments and the people who invest in his hedge fund. He's protecting against the possibility of a crash. So, in other words, if the market crashes, instead of him being down hundreds of millions of dollars, he goes ahead and puts this short order out where he can profit from it. And if it doesn't crash, he only loses, say, 10 million, okay, 20 million, somewhere around there. So that's a way to protect his holdings and the people that invest in his hedge fund. But it did have an effect on the Bitcoin price. It did spook people because of the fact that he made that grandiose put way back during 2008 when he said the housing market is in a major bubble and this thing is going to come crashing down. He got that one right. He's not right all the time, though. He's missed certain calls, okay? So 70% of the time he's right, 30% of the time he is not. But those are the reasons why we saw Bitcoin take such a quick dive down, okay? And we haven't seen Bitcoin take a dive down like that for quite some time. But it does not look like this was just a straight crash and recovery, like a V-shaped recovery that we have seen in the past where Bitcoin spikes down and then boom, comes right back up. What we are seeing is a continuation of side banding with slight bleeding. So we're going to look at the chart and then I'm going to show you what I'm talking about. So let me make myself small and then we will pop over here to the Bitcoin chart. All right, so let's take a look at this chart. And I can't draw on this because I'm on OBS right now. So I'm just going to use my mouse and circle what I'm talking about. Now, it was on the date of August the 17th that we had the major drop down. And then we did not have a quick recovery afterwards. If we look back here on that last drop, which occurred on March the 9th of 2023, we had one small red candle after that, and then it immediately rebounded. We snapped right back up above the 200 EMA. Then we touched on the 50 EMA, and then we catapulted straight up from there. So that was kind of a quick dive and a quick recovery. But this time, it doesn't look the same. Now, let's go back to this date here on February the 9th. We had a dive down and then side banding, and then we vaulted up. Now, let's compare that to what we see. I am going to mute my phone so we don't get disrupted here while I'm doing this TA. There we go, mute. We come on up to here and notice the difference. We kind of had this side banding with slight move upward, where here it's kind of an upside down cup movement here. So we wicked all the way down to 25,000. It snapped right back up before that candle closed at 26,587. But then since then, red candle, slight recovery, and now we're bleeding again. We are at 25,806, and I think there's a critical line. In fact, I'm going to draw it on here right now. I'm going to tell you what we really got to watch out for. And let's see. I've got to scrunch this over. hold on one second. Let me get rid of this line. Let's do a undo. And let's move this over and down. And I'm going to draw a horizontal line that I think is a critical line. In fact, it's right here. I just have to extend the one I already have. I didn't realize I already had it there. So let's pull this on out. This is a kind of an important line that shows previous resistance, support, and now we will find out if it will be support again like it was here at the bottom of this wick, or if we're going to blast through it and become resistance. Now, we do have a bearish stochastic that crossed over right here. We have an ugly MACD with the oscillators diving straight down. The only good thing is we're printing light red bars on the histogram, which says we're trying to get back to the zero line. But we're going to watch and see what happens if we get to this blue support resistance line, if it bounces up or if it blows through. I don't know which is going to happen. I'm thinking it could be either way. We're at the point of control price up here at 28,000, where we're well below it. We also have a healthy 50 EMA, which is still riding above the 200 EMA, showing that we're still kind of in this same uptrend since all of this activity here. But if we go below this blue line, we could get a death cross. And that's where the 50 EMA crosses over the 200 EMA. If that happens, then we're probably going to look towards dropping down to the purple dash line. Okay, so that's on the 1 day chart. Let's pop to the 1 week and see what it looks like. On the 1 week chart, we can see that the 50 is well above the 200. And we wicked below the 200. We're still above it right now. But look at this nasty stochastic cycle. It's got a fast line diverging away from the slow line. The blue way underneath the orange. Okay. And it looks like we're quickly headed down here trying to find the oversold zone. Now, what's more worrisome, is looking at this MACD. Notice how the oscillators, boom, there's the bull market. Boom, there's the second wave at the all-time high, but it's lower than this first peak on the oscillators. And then we've been going down ever since, and now we have a lower high on the oscillators and a crossover with the blue line underneath the orange line, and we're printing red on the histogram, which says momentum is clearly going downwards. So we might be headed towards this purple dash line. And if that doesn't hold, we could dip down here to 20,000 at the point of control price on this chart. And then you all know what is down below. It's the red dash line. And will we get to that red dash line? I don't know. It's too far out to tell because we've got to wait and see if we bounce off of this blue line here of support and resistance. And that's a 50-50 shot. So we just don't know. Now, let's flip to the 1 month and see what it looks like here. And this is kind of gonna tell us overall that wow, the stochastic is on this serious rise up. But notice how the candle here is going down. So that's kind of a divergence of the stochastic and what we're printing on the candlesticks there on the price chart. Okay, so this tells me that since the crossover bearish here, and then the blue line comes up and tries to cross here, and now it's curling back over, and we're not getting a rising price to go with the rising stochastic, it tells me that there is strong momentum down, and that we might have to dip down here, blow through the purple dash line and hit the red dash line. We could even hit the purple black dotted line of death. And if that happens, there is a possibility that we could go down to the 0.618 and do the golden retrace back down here to the 10,000 level. Is it possible? Yes. Is it probable? Well, maybe not as probable as staying in this area here. But the bottom line is this correction is not done because of where we are on the stochastic cycle. This thing is probably not going to make it up here to the overbought zone. Can it? Sure, it can. Is it as probable as a dip? No, it's not. So that's what I'm going to watch. And I'm keeping an open mind about a correction that could go down here. And I'll just wait and watch for the rest of this year. We see that 2024 ends at this line right here. And so maybe we got to have correction here for the next bull market to truly start, which I don't think that we're in. And that's just my opinion, not financial advice. But I don't look at this chart and say that we have entered into a bull market. This to me is a bear market rally. And this is proof of it. These big fat red nasty candles in this stochastic that has already peaked, giving us this clear lower high. Okay, so that's what we have to watch out for. All right, let's just jump back off of this chart. And one other thing I want to mention is that I will be doing another live stream. The last live stream was a tremendous success. I did have 2 super thanks, and thank you so much. I'm going to announce who they were on the next video because I don't have it in front of me, but I did have 2 fantastic people that gave super thanks on my last crypto market crash live TA report with TA on a lot of our top altcoins in addition to Bitcoin. So I'm going to keep you posted for that. And we'll leave it there for now, but I would love it if you would like, comment, and subscribe to the Crypto Code channel. If you would like to help defray the cost of me producing this channel, you may do so with the giving of a super thanks. And keep your eyes peeled. I will go live, and you can ask me to pull up your favorite altcoins, and I'll give you my opinion of what I possibly see on the chart. Not to say that I'm 100% true and can call all these things out, but I can give you my opinion, and the more opinions you have, the better. Okay. I guess that's it for now. So stay tuned. We'll be back with you very soon. And this is Carlton, and I am out.